The broadcast is now starting. All attendees are in listen-only mode.
Happy 2019, Warriors. How's everyone doing? Good morning. So it's 2019. Let's make some green this year. Everyone ready? Everyone ready to be patient? Hello, nice to meet you, Sri. So the year starts off with a little head fake in the Dixie. Tried to did take out 96, couldn't close back underneath it. So it looks to me like we're going to most likely challenge the upside again, maybe one more time, probably due to the fact that when I look at S&Ps, although we had a nice little bounce here, if you see this RSI reading here on the daily, it was a confirmed low. So to me, it looks like we should take out these lows. And we'll see if we could get some divergences developing here. Don't know if it's going to be from 520, but that was a pretty good level. Obviously, the bulls would like to see S&Ps back above the 2,600. That was a breakdown. But the yen is still signaling potential risk off. I still see no reason to be getting long the yen. It's very oversold. But the RSI structure, even though we're getting a little divergence, says that we could rally. But we're heading towards those objectives a lot of us talked about here on ForexAnalytix, taking a look at the weekly. We're under all the moving averages. 108 to 107 was talked about. So perhaps the yen completes this with the S&Ps making another new low, and then we start to get risk on sometime in January. But I don't think that we're just going to start off. In fact, the January effect is normally a positive in the markets, but also we have to keep in mind as January goes, especially the first week is kind of a tell for the rest of the year. And I'd have to say this is not a great start for the first trading first trading day of the year. So I want to see what happens in NASDAQ down around 5,900, 5,800 in here. This was a long-term target that I talked about here. Of course, I did not ride it down all the way, just caught the first wave here and then missed the collapse that we had into Thanksgiving and into the end of the year. And with the dollar looking like it's going to make a move for one more high, we have gotten to targets that Grega and some of the people I interviewed were talking about when it looked like it was, kind of a stretch, but we got up to 1288 here in the gold. I'd have a hard time wanting to be long gold here. In fact, I'm considering shorts in both gold and silver for at least a pullback, and maybe it'll be pretty sharp depending upon what the dollar does. You could see here that we're diverging on the 4-hour, and at the 1 hour, we also diverge. Similar situation. In fact, silver is even weaker today. The caveat in silver is that it was much stronger and the gold-silver ratio had turned, but looks to me like it could be vulnerable for some type of pullback here into 15. And I think we're going to have some people in here helping us. Steve has laryngitis or not the greatest voice, so after Blake is here, why don't you guys prepare your questions if I'm going to cover for Steve in the last 30 minutes before our interview with Chase. And so any markets that you want some type of look forward to after Blake is through, I'd be happy to answer your questions.
So you think you're going to get rid of me that easily, right?
I just don't want you to blow it out anymore. So I saw the Skype, and we could do that for the session or two that we have left this week, so you have a chance to recover. Happy New Year, buddy.
Happy New Year to everybody. I can speak for a while, but obviously keeping a low voice because I have laryngitis and pharyngitis. Yeah. So the little dude managed to to give
infect you.
A nice New Year's present. Yes, but to be honest, I wouldn't want to skip, speaking for just a few minutes because I think there are some nice trading opportunities out there at the moment, and I can exclusively speak about those. So I can do
Okay.
it for like 5 to 10 minutes.
Okay. Yeah,
Unfortunately,
just don't
I
push
can't
it.
manage more than
You
that.
just
Yeah.
used up 2 minutes of your voice just now.
No, no,
So
I'll have a break until then because Blake goes
okay.
first. So yeah.
Yeah. So anyway, you know what's also interesting from when Steve called the bottom in Bitcoin? Look how it's respected some of these fib levels here on this pullback. You know, we got this big candle off 61.8, and then it pulled back, and this time it's holding 50%. And I don't think we got to Steve's target off this wedge that we had here.
Yeah,
So,
but I think there should be at least one more leg to the upside. And if you look at the
right.
price action today, Ethereum is up almost 7%.
Yeah, I
Bitcoin
see that.
is not following yet. But I'm pretty sure my target once Ethereum broke out from 100, my target for Ethereum was 170, and we've already covered like 2/3 of the way there. I
Yeah.
think that Bitcoin is also going to make it to at least to its target first.
Okay, buddy. So Happy New Year, Blake. I hope you had a nice holiday season, and
Happy New
uh,
Year, Blake.
Happy New Year, buddy.
Hey, Happy New Year, guys.
Let's kill it in
Hey,
2019.
can you guys hear me?
Yeah.
Okay,
Loud
good.
and clear.
I just want to make sure everything's coming through okay. Yeah, Happy New Year's, guys. Man, as you pointed out, Dale, not a really good start to the year, that's for sure. We are, Steve his voice is failing, so I'm gonna try to step in a little bit more than normal today. But let me, Coach, you were just talking about gold, right?
Yeah. Yeah.
And so here's the question that I have, and let me go ahead and where am I? Oh, there I am. Okay, so I'm switching things up a little bit today, so just bear with me. I got to find the right screen. That would be this one. Okay, so you got let's go over to the dollar index. So you got the dollar that's firm, right?
Yeah.
And you have gold too, right? So if you go over gold and you go, oh well, gold's at the 618 retracement. I don't know if you guys noticed that gold's
Right.
probing that 618. The question is, let's say you're right, and let's say you fade gold here, okay? You fade gold here. Does the dollar start to firm up after that? I mean, because the dollar's already firm today, so
right.
That's the question. We have the dollar that's been relatively strong, through this. You can see how it's been relatively strong through this whole move in gold. I mean, even though we're down a little bit here over the last couple of days, or maybe over the last week or so, gold is still powering higher. So gold is powering higher, and the dollar just really held up. So if we see a little bit of wait, hold on really quick. HG just asked me a question.
Okay, Paulie's going to be here to help us too.
Oh, Paulie's going to jump in. Oh, that's great. Okay, good. Now, and we'll bring him on here in maybe like the next 20 minutes or so.
So maybe Blake, gold has been more about safe haven buying because of what's happened in stocks, rather than obviously not a weak dollar play. There had to have been another reason, and maybe it's just a fear trade right now.
Yeah, I mean, well, that's it. I mean, the markets are definitely under a lot of pressure here, and so hold on really quick. The markets are really under pressure, and that's just put a lot of downside pressure on downside pressure on a lot of different assets, namely, you got the euro dollar, it's been under pressure. You got the cable, it's been under pressure, and you have other currencies like look at the Aussie. I mean, the Aussie is actually breaking down. Now that has to do with the Chinese PMI that was released overnight, and the Chinese PMI has came in weak, and it's put a lot of downside pressure on the Aussie itself, and we're breaking below trend lows. I mean, this is scary price action, and I have to I have to look back and look at the S&P and realize, we've gone really far for a long time. I mean, when you could sit here and go, well, yeah, but we've sold off pretty aggressively, the end of last year. But no, if you take the last, several years, I mean, you go back from, 2008 to 2010, I mean, we've rallied quite substantially. So, to see us under pressure right now is not surprising. The question is, are we going to be able to recover a little bit from here before we resume this downtrend? And I'm in the camp that we're going to bounce at some point, as you pointed out, maybe at the beginning, sometime, here in the next week or two, we might bounce going into like later January in risk, but you have to use that as an opportunity to sell into strength, I would think. So that's going to be really the question that I have moving forward is how far is this bounce going to take us before it gives us, fresh opportunities to sell. So, what I thought we'd do, Dale, is take a look at all the majors and kind of see where our key levels are for these pairs. And Pauly, Pauly, he covered the analysis on the European crossover, which was hours ago. If you're a ForexAnalytix subscriber, it's exclusive to ForexAnalytix subscribers. If you didn't listen to it, he'll cover probably some of those key levels that he discussed hours ago. So, but I guess first and foremost, you notice the euro big rejection at 115. Now, we had talked about the 115 level as being key resistance on the week ahead video, and we really hit 115 or 114.96 pretty damn close. We hit 115 and we've reversed, back below 114. Now, if you use ForexAnalytix, and just even this morning, the analysis was big time rejection of the 115 level overnight, with the pair probing the upper end of the range. Doubtful we can break higher ahead of NFP on Friday, and the 114 level may be tested in a North American trade. And here we are, we are at 114.27. We have then since slipped to 114. So we are probing, the lows. Now, we've had about 100 pip trading range thus far today. So, I don't know how much downside is left in the euro dollar. I would think that we're probably going to find some sort of support pretty soon. So if you take, this trend line, drag it across the bottoms here, maybe 113.80 might give us some support. If you take the low to the high, that's a 50% retracement. You can see that. There's a 50% retracement there. So, 113.80 is probably going to offer us some sort of support for the pair today. Now, does that necessarily mean that, that you want to be long down there? I don't know. I mean, that might actually not even be a bad place to be long, just if you're playing the ranges, because, bottom line is we are still in a range, right? So, we are at 127% extension of this move higher right now. The 161% extension comes in at 113.72. So, somewhere down here, 113.80, 113.70, I think that would offer a good, range trading type of trade. So in other words, if you're just kind of, trying to visualize all this, maybe a dip down here, and you might be able to get long somewhere down in this level, in that area, later today, especially once North American trade opens, you get, allow some downside pressure in the equity markets at the open, and maybe that takes out some of that support, and then that allows you for a better trade here. So, but that's kind of what I'm thinking with the euro. So let's go over to the cable now. The cable, wow, this has been
one day wonder.
It was, and I was really surprised that when, we closed above the 127 level, and it looked like, oh man, here we go. We closed above 127. That was a pretty ugly candle, really long wick, but still, the close above 127, I was thinking, oh, maybe we got to move back up towards 129. We actually had strong manufacturing PMI numbers out of the UK overnight, that didn't help the pound at all, and the pound just came, just get slammed right back down. And I guess, if you think about it, while we're, waiting for the final Brexit vote in Parliament, it's very risky trying to be long the cable, at current levels. I mean, we have to get the Brexit deal past Parliament, and if it doesn't, the pound's just going to fall apart at the seams. But if you really want to be on the long side, you've got to wait for that vote to pass, and obviously it hasn't yet. So it makes it for a very treacherous trade right now, and really the pound seems untradeable at this point. If you get caught up trading it, it's going to be probably a pretty difficult. It's going to be a difficult trade, no matter which way you're looking at, no matter which way you're looking to trade this thing. It's you could be caught on the wrong side pretty easily, I would think. We talked about the Aussie. The Aussie is probing the 70-cent level. We are here at 70 cents. Pretty key, 127% extension. The daily RSI is divergent. We're not oversold anymore. We were oversold, but we're just divergent. That means, in my opinion, the Aussie's got some downside here. And Dale, we were just talking about gold. Well, if gold reverses, how's the Aussie gonna? What's gonna happen to the Aussie here?
Yeah.
I mean,
some long-term bears are talking 50 cents, Blake.
I'm going to hope we don't. And here's the reason why. If you guys, well, if you guys weren't around, back in, 2000, 2002, 2000, this is when I really first started trading the FX market right here. I was trading equities, and then I branched into FX, and I really started trading around this time frame when as Americans, we could start trading in the currency market, which was 2001, 2002-ish. The Aussie was in the 50-cent range. And the problem with the Aussie is that the volatility was so bad in the Aussie and the Kiwi. Those pairs, you were lucky if you got a 20 to 30 cent trading range every day when it was trading at those levels.
I can't remember that far back, man.
God, I mean, there was no volatility. I mean, it sucked. Those were like, those pairs are the pairs that I just didn't even focus on. And once the Aussie got closer to parity, the volatility really started to increase, past the financial crisis. But once we were up, around parity, I mean, things, that's when the Aussie, you'd have 100 pip trading range during the day. But I really hope we don't get down to 50 cents or down to those levels. Now we may, with the ongoing tensions between the U.S. and China, I think the risk is that's high. That those currencies see those levels again. But for right now, I guess the key is, where do we close today? And I think if we can close back above 70 and a quarter, if we can close back above 70 and a quarter, you're going to get some bears that have some second thoughts about, about being short the Aussie. I'm not long. I'm actually short the New Zealand Canadian still. So I'm still trading, short an Antipodean type of currency, but I'd be a little nervous if we close above 70 and a quarter here in the Aussie. Let's take a look at the Kiwi. The Kiwi is actually held up relatively well. We are, below the 50% retracement. Is the Aussies trying to break down? The Kiwis trying to break down as well. But this is another one that I think that if we close, back above, 67 cents, which, this is basically right here, we close, back above these levels, you're going to have bears that have second thoughts. I don't know if that's necessarily going to be the case. I just think that would be the risk with the Kiwi at this point. The Canadian. Now we were talking about. Let's talk a little bit about the Canadian, the dollar Canadian. All right. So crude oil has been obviously very weak, and that has allowed for the dollar Canadian to really rise towards the 618 retracement on a longer term basis. We'd call it channel resistance up here, and that's, you know, you can see how the daily RSI is overbought. We're divergent, and we're trading up at these levels. Now, I'm long Canadian dollars. I'm short the New Zealand Canadian. So there would be nothing would make me happier to see the dollar Canadian drop through this support and, you know, drop through, you know, 133, you know, 132 level. You know, that would be awesome. I would be, you know, whistling Dixie at that point in time if that should happen. Now, I was talking with one of our traders in our chat room who's pretty active, Nitish, about, he was saying that the dollar Canadian's pretty resilient. It has, but you know, the dollar Canadian, I've always looked at it as more of the canary in the coal mine. So if it's strong, you know, that's telling us that there's, you know, probably more dollar strength to come. And if it's weaker, then, you know, vice versa. Well, the thing about the dollar Canadian, if you think about what's happened over the last couple of days, the dollar Canadian really has been stuck. I say last couple of days, last couple of trading days, the dollar Canadian is in actually a fairly tight range. It's made its majority of its move, you know, 2 weeks ago. So the dollar Canadian is just kind of hanging out up here. Now, I'm not bearish the dollar Canadian just yet, but I think below today's support, or today's lows, which is 135.70, you know, you break back below those lows, and we're going to it's going to offer some counter trend opportunities. Maybe, you know, the dollar Canadian's back towards 134, or maybe down towards this breakout point at 133.75. I think that's the risk. But if you look at the Aussies hitting new lows, all right, so just, you know, take a look at the difference here. You know, Aussies hitting new lows, Kiwi hitting new lows, dollar Canadian not hitting new highs. Now, that's not saying that the dollar Canadian cannot hit new highs. It definitely can. However, it's struggling to make new highs, and it has been for the last couple of days. And so that, to me, is a little bit of a risk to the dollar Canadian, especially if we see a reversal, and, you know, if we see the euro back, you know, maybe at 114.50, you know, the Kiwi bounces back above 67 cents, as the Aussie, you know, is back above 70.25, you know, the dollar Canadian could slump again. And I think you got to watch crude too, because crude, let's take a look at crude really quick. Crude is obviously, you know, extremely bearish, but look at the divergent relative strength. Now, the divergent relative strength, and the divergent relative strength is doing one of two things. It's either it's either going to allow for a bigger bounce in crude, or relative strength is now moderated and we can get another leg lower. Now we are talking about crude oil, and crude has had we've lost almost 50% of our value since September. I mean, if you look at the move, I mean, we're down 40% from the highs just in the last couple of months. And that's a pretty massive move in crude. And now I'm actually longer term. I think, you know, I'm one of those people that believe that crude oil is going to, you know, the fossil fuel is going to eventually, you know, not, it's going to be worth less and less and less. But, you know, that doesn't mean crude oil is going to go to zero either. Crude oil will always be traded as a vehicle, in my opinion, because you're going to have outputs adjust, and yes, I think that, the Middle East is going to, is going to suffer as a result, as crude oil is, used less moving forward, blah, 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 all the macro things behind crude. But I don't know if this price fall in crude oil, it's probably going to revert back to the mean, meaning it's probably going to bounce at some point. Whether it's here or whether it's at $40, I don't know. Maybe it makes it all the way down to $37 before it bounces. But I'd be a little nervous about being too aggressively short crude down at these levels, in my opinion. So, but if crude does bounce, that could be, the catalyst that drives the dollar Canadian, back towards the 136 and maybe back below, 135.70 or, the support down here. So that's just something else that I'm paying a little bit of attention to. Wow, the dollar yen continues to just get blasted here. We're approaching a 618 retracement. Take a look at this dollar yen. I mean, these yen pairs are really under pressure. I tried to play the euro yen to the long side, and when I tried to play counter trend here, I was playing really small size because, this is obviously a really big sell off here. But man, we are below all of the support down here. So the euro yen just getting absolutely crushed. And I don't know why I don't even know what that is doing there. Let me get rid of that. But man, this euro yen is really breaking through some support here. So pretty bearish price action, not only in the euro yen, but look at the dollar yen. And the dollar yen, the 618 comes in at 108.42. So that might be the next area of support here. And the euro is trying to crack. So you can see how the euro is coming down. We're getting close to that 80 level, where you might be able to find some support down here around 80. I might try to pick up some euro down here if we get down here in the next couple of minutes. So we'll see. Dale, are you still there? Lost him a few minutes ago. Not sure.
I'm here, buddy.
Okay. All right. Not sure if you had any comments of anything I was saying. I just hadn't heard from you.
Okay. Yeah, I Skyped. Commodity kidneys.
Okay. So got it. All so right. we got the let's watch the euro as we come down into the support here. So watch the 113.80 level. I might pick up just a little bit down here.
S&P's under pressure.
Yeah, I see how they're breaking lower here. I picked up a little bit at 84 on the euro dollar. Right here, let me reset this.
Looking for a scalp here?
Yeah, if I can get it back above 114, I don't mind being long a little bit here. Like I said, it's we've got, it might come down into the 70s. It's entirely possible.
Maybe back to 1420 or something.
Yeah,
like that,
something of that. Yeah, something like that. Nothing too crazy here. But
when it comes to risk right now, and you were talking Aussie early, Blake, I hope it's only a trade war with China, because there's been, I know, you're a military guy, but I don't know if you've been reading about all the confrontations that are happening around those Spratly Islands with U.S. carriers. And it almost seems like, we're at war, like war games going on. Not trade war, but military stuff happening between us and China. I hope it doesn't lead to anything, but they're, both the U.S. and China are flexing their naval muscle right now. Yeah. And it's dangerous because, when things like that happen, accidents can happen. All generals say that, when that stuff is happening, something could occur by accident,
right.
And that concerns me.
Does it? I mean,
yeah.
I mean, yeah, well, I mean, it's entirely possible. It's definitely a scary time.
I mean, they're boasting about how they could take out our carriers with their new weapons. They actually built weapons to take out carriers. And I saw a U.S. Admiral say that, yeah, we are vulnerable to those weapons. So, when in a bear market, and I don't think we're going to have a long-term bear market in equities, but the expression is, in a bull market, anything that goes wrong doesn't, and in a bear market it does.
So you don't think we're going to you don't think we're going to be in a longer-term bear market?
I think that there's going to be a place to buy these, and I actually think there's a chance that we have some smart guys. Grega is talking about this just being a wave 4 pullback, and that we could get new highs eventually. I think that is a possibility. I don't know where the load's going to come in on the S&Ps. I think I don't have to know. I think the charts will tell us when we're bottoming. I just don't think we're there yet. Yeah. But yeah, I think there's going to be a nice recovery in the S&Ps, and I actually think we could trade 3,200 sometime, maybe in the spring, summer. Wow. And I think that'd be the big surprise. Yeah,
that would be I would not expect that to happen. That would be the last thing I would expect to happen, actually. So
I think Grega thinks so, and I respect Grega's work a lot, and they're I do a lot of intelligence gathering, and there are a lot of people that say it's not a beginning of a bear market because we haven't had the inflation move, but I don't think that happens until we get a dollar top.
So this is his long-term monthly view of and if you want to see like what his Elliott wave views are like longer term, those are them. So that'd be interesting. Right. I was gonna say I think Paulie's gonna come in and say a few things. Paulie, are you here?
I think we have to upgrade him to presenter. So raise your hand. He's probably in as a. I think he's in as
an organizer,
attendee.
No, he's an organizer. I can see him.
Paul, are you here? We can't hear you. By the way, you might have muted your own mic.
Yeah, he's not muted from our side for sure.
No.
But I think he has had the same problem before, which I don't understand why, because he can speak just fine on the European crossover webinar. Yes, you're here, but we can't hear you if you're speaking to us. Right? We can't hear you.
Yeah, he can't. We can't hear him.
Well, Blake, if you have to run.
I know. Well, I know Steve is here. Or Steve's here.
I'm here too. Good morning. Okay.
Oh,
good morning, Cindy.
Happy New Year, still, Zap.
Happy New Year, Coach.
Yeah. All right,
Happy
buddy.
New Year, everybody.
Wait, let's hold on. We're going to make Paulie a presenter, and just because we want him to see if this makes a difference. See if he's logged in as an organizer, but let's see if he
Blake, he's logged in twice. He's logged in twice, actually. He's also as an attendee.
Oh, well then
probably that's the account he means.
Yes. So let's do that.
Yeah. Let me make that one a presenter. Wait.
Sounds good. Are you okay? Sounds good.
Steve was singing opera.
Hey, we can hear you now, Paulie.
Okay, now I just needed to be made as presenter. Let me see. Hang on one second. There we go. I think you got it now. Is it? You see my screen?
We totally see it.
We can hear you and see you just fine, Paulie.
Okay, great. We were talking actually earlier this morning when we did the European crossover, which is at 3 a.m. Eastern. I apologize, at 4 a.m. Eastern, but we were looking actually at the dollar yen, and I had done the work, the analysis before, as we're getting ready to come in toward actually the new year. But I was looking for 929. But in this morning, while we were doing the European crossover webinar, we were actually trading at 875, and we were talking about this would be a good area to, at least if you're short, at least lighten up on those positions. And we did get a rally back up to 930, almost 930, and we paired back. But if you look here on the let's take a look here on the weekly chart on the dollar yen. We actually have some pretty key support here on a closing basis right here at 905. You can see that coming right across here at 905. So I feel that the market will be able to close above 905. But for today on a daily chart, we do have good support here, which came in at 875. That's exactly where we were at the time of the European crossover. Now, like I said, I didn't expect this to, at the time when I was doing the analysis, I was pointing out that the 929 level here and confluencing with the 957. But when we did the European crossover, we'd already broken through the 9 level. But this 875 provides some good support here. I think we'll probably hold, but obviously the ferocity of the move with the S&P. And one of the things I was going to mention or piggyback on the Dale was mentioning, when I was looking at in the Asian session and the Aussie was already starting to slide back, we'll take a look at the Aussie, and Blake made a good point too about it being at 70.27. That's a huge weekly support. But one of the things I saw here was some comments coming out of China about the Taiwan, and that they were saying that Taiwan is they felt has always been a part of China, and in regards to the reunification. And I was thinking one of the things I think that might be a reason why the S&Ps might be a little bit lower. The administration in China is supposed to get together with a meeting to try and resolve this tariff stuff, and Trump was saying he thinks things are going to be okay, or they're looking great so far. But I'm thinking, alluding back to what Dale is saying, with China ramping up all these comments regarding Taiwan, I think that kind of throws a monkey wrench in it and probably has the market a little bit concerned about that, and why we're seeing these S&Ps, take a tumble even further. And obviously here on the Aussie, we're just below 70 cents. I wouldn't be surprised on a weekly close if we close below 70 cents, but if we get some good news afterwards with the tariffs, which I think they will, and the market will use as an excuse, we can, rally back up. So I think it's a good possibility. I said this in the analysis, even in the analysis that we have here on ForexAnalytix. Go back in here. Well, I'm off the screen right now, but we were talking about it possibly closing below the 70 cents, and then turn around and come in right back up the following week. But I think that that's probably where we're having those problems with the Aussie, and why it's kind of a bit on the back foot, and now we're below 70 cents. And I think those comments from China probably threw a bit of a monkey wrench in there. And now we're thinking, oh, you know what, maybe things won't be so well after the trade tariff talks. It's just going to make a situation worse. One of the things that some people had asked about was on the gold market. Now we cover the XAU, and if you look here on the gold, and we're looking on the weekly basis, we're actually, as Blake said, we came into the 61%. We have some resistance there, but we have a nice little zone between 1293 and 1304. And depending on what the dollar does on NFP day, I really wouldn't be surprised if we're able to do and jump up to this 13. And then from there, we'll probably ease back a little bit. We were talking about this for the last, I guess, about 3 weeks ago, when gold was trading at 1257 or 1252, and we were talking about I didn't know why gold had not appreciated more in light of the volatility that we'd seen in the equities, but finally we're starting to go in and follow through, even though the dollar itself has moved higher. But we are into some bit of a resistance here with 1287 here on the 61% of this entire move of 1160 to 1365 in the XAU. But you can see right here, this 1293, I think this is where you actually find a little bit of resistance, but depending on what happens after NFP, I could see us make one more jump in here and tag that 13, just get above 13 before we see the market maybe pull back a little bit further here. I don't know if you have any other additional comments, Dale. One thing, looking here on the dollar index, we are into some resistance here. Actually, when you look at it on the daily in the cash dollar index, and we are just above that. right here.
I like your charts, Paulie.
Oh, thank you. But here you can see right here, we're just above this daily close resistance. And boy, did we have a heck of a turnaround. 96.44 is actually the 38% of this recent move back. But you can see it's going to be pretty key if we're able to get above this 96, even right here, if you want to call it 96.58. I don't think we'll be able to close above that on a daily close, but it'd be pretty key if we're able to. But if you look at it here, which I like to look at the 2-hour charts, but we had right here 96.47, 96.56/58 is the daily resistance. So I think we could probably ease back a little bit. Certainly the euro, one of the levels that we were looking at, and actually I stepped in, I actually bought it 1402, and I added down here at the same time with when Blake did. We're looking actually on the euro coming into today, and that was before we opened up so strong. I was looking at 1402 being the area where they would step in and try and defend that. But then again, we opened up very strongly. We were actually covering this on, and we were already pulling back at the time. We were, I think, at 1440 on the European crossover, but we already got this little, and I was saying at the time, I don't know if you want to call it a shooting star or maybe a gravestone doji, because it isn't after a huge rally, but you can see it was certainly a bearish setup. And if you look at our exponential moving averages, we'd actually already turned much lower from the 1440s and stayed just that way. Same thing here on the 5-minute on our exponential moving averages. With one of the things, and I'm talking like a 90 miles an hour, but one of the things we've seen over the last few months in FX is we just don't see these good moves where the markets just trend and trend. We've talked about this several times. You get the 3 steps forward and then 2 steps back, or 2 steps forward, 1 step back. So I've gone back to using these exponential moving averages, and they are able to catch the short-term trend where you can see the market start to turn. And you can see here, whether you're looking on the 30-minute, which will generate a sell signal, I guess around 1438, and has stayed that way, and the euro remains under pressure. But this has been the one thing that has kind of kept me in decent sides of the market, because, like I said, these trends don't seem to last very long. Getting back to the dollar CAD, what Blake had pointed out here also is we had a resistance here today at 36.44, but there's still, when you look on the weekly, and we had that on our analysis too, coming into NFP, there's a chance that we can make a run up there on NFP today, NFP day at 37.15. So watch that on the dollar CAD.
Okay.
And only other thing is also here on the bonds, we are into some pretty good resistance. This is actually right here. If you look at right there at 46.28. So once again, with this equities being under so much pressure, they've stretched this pretty much for all it's worth. You can see pretty good solid close resistance here on the bonds at 46.28. We might start to see this thing ease back a little bit. The bunds certainly got further than what I even thought here. They made
the bunds have broken out actually from a major formation.
No, you're right. You're right about that, because I was looking at it here on the daily, and look at this. Boy, that's huge resistance coming across.
There is a huge descending channel that has it in essence encapsulated all the corrective price action since let's say 2016, because the bunds peaked at September 2016, and we've spent a huge period consolidating in a clearly corrective move lower since then. And 164 was the line in the sand, because it was previous highs, and it would definitely confirm a break above this descending channel. And we seem to be breaking above it with some real momentum today. So
what's it measure, Steve? Like 170-ish or something like that? Longer term?
I haven't even measured it, because there's no point. I mean, it's the target. The target of this move is much higher to even to even care about it at the current juncture. So I'm guessing that a lot of this momentum we're seeing today is also stop losses getting tripped over, because a lot of people were looking at this area, the 164 area, as a line in the sand, and now that we're crossing above it, doesn't look like it's going to be easy for the bonds to reverse course, which makes me a little bit more skeptical about what kind of a move we were seeing here unfolding in the treasuries as well. Obviously, they're not 100% correlated. There's no question about it. And, the two economies and their monetary policies, most importantly, have been diverging. Although I do believe that, the monetary policy from the side of the Fed is not going to remain, let's say they're not going to keep tightening one way or another through 2019. So I believe there is going to be within 2019 some kind of a convergence between the monetary policy approaches between the two central banks. But regardless, I think one of the things I wanted to show is definitely the huge breakout in the bonds, because I think that this is something that you should take notice.
One of the things, and I agree with you. One of the things we did have some bad German data come out, and I think it's now it looks like the market is starting to really grab hold of that. And we have so many cross currents. It reminds me what Blake was saying. I think it was, I don't know if it was on the week ahead video. He doesn't want to necessarily be. And I had mentioned also is that I don't think the move is going to be so much based on the euro as opposed to maybe, based on if the dollar decides to go in and pull back. But the problem is that with the data that we're starting now, we did get some good Italian PMI. That was actually a surprise there. But the German data, and everybody knows that Germany is the hub of the Eurozone, is, we've already had bad auto figures for a while. It probably portends that this is probably going to, and probably why we're seeing this breakout, is something that's going to lead for several months. Even if the U.S. is going to pull back, the Eurozone might still be quite a struggle. And why I think that, I think that these moves in these currencies is going to continue to be the same thing. And I'm talking about specifically the euro is, 3 steps forward, 2 steps back, 2 steps forward, 1 step back. It's just these trends and these moves don't last very long, and then they quickly dissipate. And I think that when we opened up at 115, I was surprised to see us open up that strong. I thought it had probably a little bit of a, if you want to call it a hangover, a positive hangover about the Italian budget being passed. But the realization is, and then when this German data comes out, at the end of the day, how do we stand? And they did get good Italian PMIs, but how does overall health of that Eurozone economy stand? And it doesn't stand so well. And then you've got the concerns of Brexit too. So it's easier to go on and let the euro slide back.
The problems in the Eurozone are mostly political, Paulie, because many people don't realize, but if we made the assumption that the completion of the Eurozone would have been concluded in the past, so if the Eurozone had ended up becoming, besides a fiscal union as well, so there was centralized fiscal managing and some centralized economy managing, I would very easily argue against anybody that the Eurozone would be in a much, much, much better situation from a fiscal standpoint in comparison to the US. So if there were not the potential huge problems that can keep arising and will probably keep arising on the political side, with many countries trying to gain benefits by, for example, trying to blackmail, as we saw Greece doing in the past, Italy trying more or less to do the same thing, France trying to get some kind of a different treatment, etc., etc. And who knows what else we're going to see when the next recession hits, because we're going to see a lot more populist governments trying to promise, citizens that they can offer them, a lot more, and they can gain a lot more from the European budget, to assist, any given country. I would definitely be both hands along the euro, but the political dangers and the risks are huge, and that is why the euro keeps underperforming the US.
Yeah, but once again, like I said, the moves don't last very long. I would have expected the euro, it had the opportunity to move And we've seen those moves in the past over the last few years where, you'd make a good run for about 200, 285 pips. And before the market comes back, you digest, we come back, we, basically reload the cannons, and you go back and try and attack those highs again, see if there's something there. But like I said, if you look at this, I think that this does go pointed out every time about ready to break out, the market turns around and falls apart. I think it's going to fall apart. We turn around and bounce back up. And if you look at this, it's just up and down like a freaking yo-yo. And why I think you have to, if you're going to trade this, you really have to focus on a little bit more on the shorter term, because until proven wrong, these moves just simply don't last. And like
I agree with you. I agree with you. And knowing how USD centric the Forex market is, my assumption is that within 2019, this market environment that we had in FX, which is exactly what you're describing, is going to change dramatically. I believe we're going to go towards the complete opposite direction. And in my opinion, the trigger point for that is going to be when the market realizes how overpriced the US dollar is, based on expectations of monetary policy that are never going to be fulfilled. I believe that we're going to have a U-turn in markets expectations at some point during 2019, and then the market will need to reprice a lot of things in a very short period of time. And that, I believe, is going to be the trigger for us to start having some very nice, trendy FX markets. At least that's my first day of the year assumption looking forward, prognosis, let's call it.
Yeah, I agree. But so far, it just certainly hasn't materialized. But to me, I believe the pivot's going to be NFP, where we can finally start to see a sustained move once we get a move. But I think it's going to be important with the cash dollar index. To me, we talked about on the European crossover, when we get to NFP day, to me, I think it's going to be about this 96.47 area here. If we can slide back below that on a 2-hour close, then we can go back to attacking the lows. And I think you said, like you said correctly, and I think it's really going to be a matter of perception. The further we go lower and lower here in the S&Ps, at some point you have to wonder, and I would think the same thing, why I was surprised why gold had not responded before is you're going to go in and catch a different view of these U.S. assets, where people, as you say, start to question it. And maybe, like you say, it starts to develop a little bit more of a momentum where people question what the Fed's going to be doing. And then Dale made a good point about a bull market. Well, I think at that point, maybe you start to look at the glasses half empty, meaning, well, okay, well, maybe the economy is still doing well, but the Fed's not going to be able to do this. And eventually we're probably going to slow down. And what happens with housing prices? And it starts to garner some momentum. Also, the concern with crude oil, the move that we've seen, the extent of this move so fast that certain areas of the economy, certainly in Texas, are going to sustain some pretty good weakness. I think it was someone who pointed out, this is about a couple of months ago, that Bloomberg did a story, and I saw that it says, as goes Dallas, so goes the country. And it was pointing out that how the housing, valuations have boomed and boomed, but most recently, we weren't getting those bids anymore, and people started to hold off, and we're starting to see offers come in.
Auto industry and market and housing industry already have been showing very worrying signs during the past 4, 5, 6 months, and those are usually leading indicators of the state of the consumer, right?
I agree, and it's just a matter before we start to see.
And anyhow, over indebted consumer. So that's another issue to consider here.
So really the important thing for NFP is to see if if the jobs growth is
also
really,
going to reverse. Yes.
If it does reverse, and if it does reverse, then I think you're going to start to see those the cracks in the U.S. dollar, if you will. I think you're going to start to see the U.S. dollar maybe some of this strength back off a little bit, but for right now, I mean, the dollar is still very strong, and it's hard to fade. I mean, you can see I picked up the euro a little while ago, and it's things really under pressure.
Absolutely.
I've seen a lot of inflection points on the NFP and the dollar So I would love to see the dollar pushing against the highs and taking them out into the NFP for an inflection point. So
me too, Dale, especially
yeah,
considering that during the last session of the year that we had, completely liquid, completely liquid environment, of course, we got all those false moves. I mean, the cable broke above 137 falsely, the euro opened up. I think there were even some pre-market quotes at 115.40 in the euro USD yesterday. So, and a false break there in the euro as well. All those are, signs, as you said, that in the short term, we might see some more dollar strength coming in the market. So I wouldn't try to fade the dollar in the short term, seeing those false breaks. But I would later on, because I do believe that this year is not going to be a year that will be able to sustain dollar strength.
Hey, another chart that actually got my attention, and it's just because Stelios in our chat room, he had mentioned that the pound yen, the guppy, was down 200 and some odd pips for the day. The pound yen's actually coming in some pretty key levels of support. Let me go ahead and I'm going to take over really quick.
Okay.
Paulie, so I can show you guys what I'm looking at here. I get over to, yeah, okay. So here's the pound yen, and the pound yen coming into 127% extension of this entire move up from the August lows to the November highs. 127% extension comes in just below where we're at 137.36. The 618 retracement post Brexit lows to the highs come in at 137 basically. So I wouldn't be surprised if the pound yen obviously is under pressure right now. It's difficult to run out and start buying something with a big red bar like that. However, I would really start to think that we might get a bounce soon in the pound yen. I think it's doable, so just I think you got to be careful, especially when we're down 200 pips intraday. You know what I mean? So that's one of those things that I think that you can start, especially if we push to a brand new low like 137.30s, 137.20, you might be able to see a reversal here. Well, hey, I know we have in just a few minutes, and by the way, we are oversold relative strength wise, divergent on the pound yen. Just if you guys can't see that, I want to say. Dale, you have an interview coming up.
Yep.
And I just want to say Happy New Year to everybody who is with us today, and welcome back if you're coming off of your breaks. I know this week is a full trickle back into the markets. You'll have a lot of people that are actually out throughout the course of this week as they're wrapping up their holiday travels. But I just want to say Happy New Year to everybody listening. Thank you so much for your continued support. For those of you that are ForexAnalytix subscribers, thank you so much for your support with our product and being part of our family. And remember, if you guys haven't visited Forest Park FX, they're located right here. You can end up getting ForexAnalytix for free through the reimbursement program, quite possibly, depending on how much trading you do. So make sure you reach out to them. It's under our reimbursement program right here. And if you're in the United States and you want to, and you're not in Europe or Asia and you can't be involved in the reimbursement program, well, you can get some, possibly cashback rebates for your trading. So make sure you reach out to Forest Park FX. So with that being said, Dale, I'm gonna pass it over to you because I know. Yes,
I'm gonna grab it for a couple of minutes before the interview to show a couple of things fast, and then I'll pass it to Dale. Don't worry about it.
Okay.
Yeah.
All right.
Yeah,
Sounds great.
I look forward to another year of us building up and edifying traders every day. And I feel like we've been accomplishing that for quite some time now, and the team has never been stronger. And what a great thing to have Paulie in here with us today so people could see what kind of great levels that Paulie points out every day to our European clients and U.S. people that get up early, and our Asian members that stay up late. So, Paulie's a pro.
Thank you, and thanks, Dale, and we're really proud of the team that we have here at ForexAnalytix. And yeah, if you guys are ForexAnalytix subscribers and you can tune in at 4 a.m. Eastern every day to the European crossover, you got to do so with Paul Franco. So, all right, thanks, guys.
Even
right,
those that can't, we share immediately the just for our clients. Yeah, the link to the video so they can watch it when they wake up, and then we share it with everybody, but many hours later. So if you want to catch up, Paul is usually short-term view on the markets. You can do it immediately after you wake up. The recording is going to be there for you if you are a ForexAnalytix subscriber. So a couple of things I wanted to show, Coach, that are interesting. One, you remember I was quite clear what's going to happen with copper here. I'm still short copper. We got multiple attempts to retest this area, but the price action was very, very clearly corrective, and I feel quite nicely with being short here. I got myself a nice level, and I think it's going to do fine, and I think it can easily reach my target at 245. The other thing I wanted to show.
Good patience, Steve. Very good.
Yeah, patience. It's required. There's no alternative.
And really, you have to stop singing opera on the weekends so that we have your voice here Monday through Friday. Okay.
Okay, I promise. So the other thing I wanted to show is that every single I was writing that earlier actually in the chat room. Every single of the pound and euro crosses against Aussie and Kiwi are at quite important levels. The pound Kiwi, I had also pushed an update for that at the last day of the year. The pound Kiwi, after reaching the inverted head and shoulders formation target, it seems to be turning lower and might even be breaking the lower wedge. The pound Aussie also seems to be in a wedge getting rejected from the 61.8. And as you see, RSI is clearly diverging. The euro Aussie, after a very nice recovery, has reached the previous highs once again, and it might also be in a wedge. You can clearly see the RSI divergence as well. So euro Aussie, a very nice area to get rejected also. And the euro Kiwi has also stalled at the 50% fib of the previous move, created a wedge, retested the high, has even the possibility of creating a double top here. RSI also diverging here. So bottom line, I would pay attention to those crosses because there is a decent possibility that we're going to see a pullback from here. So those were the pairs I wanted to to focus my attention very briefly today. So I don't want to bleed anymore into your interview. I have more things to talk about, but we can do that tomorrow. Hopefully my voice is going to be better tomorrow and I will be able to speak for longer. So happy New Year, everybody. Yeah, happy New Year, everybody, once again. And, let's make it count, and happy first interview of the year, Dale. We have another 200 and something coming ahead. Okay. So I hope you've charged your batteries.
Yeah, they're ever ready, buddy. Okay. Ever ready, like the bunny. So get a chalkboard, Steve, and stop talking, and look forward to hanging out with you again this year. And I do believe you give the best review when you have a voice of the whole board every morning. So everyone, without further ado, hello, Chase. I'm going to make you the presenter. Looking forward to meeting you and hearing you, and Happy New Year to you, Chase Taylor, at Pinecone Macro. So you'll see a drop-down menu for you, Chase, where you can unmute yourself, and looks like we have you up there, the forest for the trees. I like that. I use that for our sponsor, Forest Park. So waiting to hear your voice, Chase. Let me see if I have you muted.
Dale, I have unmuted him. It now says self-muted.
Okay,
but so muted from his side.
All right, so there is a drop-down menu for you, Chase, to open up your mic.
No,
you're calling in. I think he's calling in.
He's on now.
Hi, Chase.
Hey, guys hear me?
Yeah.
There he is.
Hi, Chase.
Hey, Happy New Year.
Happy New Year to you, buddy. Very nice to meet you. Let me start off with why pine cone?
I don't know if you're familiar with Mark Spitznagel or not, but he wrote a book called The Tao of Capital, where he goes into a lot of detail about sort of the strategy of pine cones, which sounds odd, but is actually really fascinating. And I just found that really compelling, and that was kind of the origin story. And I've been writing a free newsletter for a while, and write a lot about pine trees and pine forests, and use a lot of analogies for markets, and just kind of stuck.
I love those trees. Does it have anything to do with the geometric nature of pine cones and how it may apply to the markets?
Yeah, so I have written a little bit about that, the Fibonacci sequence and pine cones, but a lot of it has to do with the fact that fire is good for a lot of pine trees. Is something I found very interesting. Many different species of pine trees, they can't even spread their seeds unless there's a forest fire, which is just interesting that they find opportunity and disaster in that way. So
it's like the Chinese definition of opportunity: danger,
exactly,
and opportunity. Very interesting. So before we get going on some of your views and your looks here, can you tell us a little bit about your entree into the trading business or newsletter writing business? So how did you get started? What were you doing prior?
Sure. So also a military guy, Air Force. I started trading in 08.
Good timing.
Before that, I never really had any interest. But then whenever the financial crisis kind of hit, I started getting interested in economics. And I kind of started out in the Austrian school learning economics, not trading. And then over time, just started trading a little bit here and there. I naturally, like most people, got killed early on. But just whenever I found macro and started learning the different ways to take, geopolitics and macroeconomics, mix them all together with markets, and not to mention, the psychology side and everything else, it just started to really click for me, and I just love it. So ever since I started really digging into the macro side I've just been trading more and more. But no business school or anything, just self-taught trader and macro analyst. And been doing the writing stuff for about a year or two. That's only so.
Okay, so your influence is what was the gentleman's name who wrote about pine trees and pine cone? I'm not familiar with his name.
It's Mark Spitznagel. He runs a tail hedge strategy hedge fund.
Okay.
Universa is the name of his fund. But he wrote a book, and he has another one coming out sometime this year. But I like his. He's not really a macro guy either. Just he's worked with Talib in the past doing some of the tail hedging strategies.
Okay. All right. So I see you have Dr. Copper up here, who looks like he needs maybe a doctor himself. What is your work telling you? I see the triangle that you have, kind of similar to what our Steve Volge had, very classical triangle breakdown and retest. Why don't you go ahead and tell us what your views are, and maybe what the macro implications of what you're seeing from copper may be?
Sure. Yeah, I had this one outlined and was kind of waiting for the same trade to happen. So whenever he mentioned it, I was happy to see that, because it looks like a clear technical breakdown, and it just makes sense from a macro point of view with global growth slowing, and China kind of leading that down. So I think this one probably has a long way to run, at least possibly. And backing out to a weekly, kind of right on top of that 200 week right now. So it's going to be big to see what happens there. And there's some support here, so it'll be interesting. And then here there is a horizontal level that I think is kind of my target to get down to around this level.
Okay.
To see what happens, but yeah.
Okay.
And
so Copper, kind of a sign of what's happening in China. Having been in the military, were you a pilot in the Air Force?
No.
Or
so I actually did a few different things. I worked on aircraft.
Okay.
On
carriers?
Also did a lot of what's that?
Did you work on aircraft on aircraft carriers?
No. So I worked on B-1 bombers.
Oh wow.
Yeah, out in Texas.
All right.
I did some intelligence work, the geospatial intelligence, which is basically imagery intelligence. And also some work in some research laboratories.
So you were using charts in the military in some way, weren't you?
Not really. Although it was always fun to, before a missile launch in North Korea or something, to just kind of pull up a chart of gold and see what happened to it or something like that. But no, I've never really used them professionally though.
All right. Well, you brought up gold, so my statement for gold and copper, the difference between them is copper is about construction and gold's about destruction. So I see you have it up there on your screen. We've had a very nice run. Are you interpreting this move in gold that we've had recently as the beginning of a new bull market, or merely an impressive bear market rally from the $200 decline that we had starting last year from 1360 and then a low at 1160?
Yeah. So I've really struggled with this move. It looks so good technically, but I've been a pretty hardcore dollar bull for about 2 years now, and I still am, although it's getting harder and harder to be in some ways. So because I am so dollar bullish, I'm kind of struggling to think this move's real. But on a technical basis, I mean, it's been nearly perfect. But I still think the dollar has some room to run. What I think a lot of people don't realize is historically, whenever China is leading a downturn, that tends to make the dollar more of a safe haven than it is at other times.
Interesting.
If anywhere in the rest of the world was doing well enough to take some capital from the U.S., I would have a lot different view of the dollar. But as long as the Fed's going to keep QT going and it's going to keep sucking up dollar liquidity, it's hard for me to be anything but a dollar bull, with the rest of the world slowing down perhaps harder than we are right now. So because of all that, I still think that gold's likely to have another leg down before it can really have the bull. But like I say, technically, it's been the way it chewed up the 200-day moving average and a lot of different horizontal, levels. This has been impressive. But you see on my chart there, it kind of has like a mini parabola going, which concerns me. So if it breaks down out of that, I would actually look to short it.
Okay. Interesting. I learned something from you already, Chase, about the fact that it's hard to fade the dollar when there are economic problems in China. And, we'll see if China can resolve it. I just want to get off course a little bit because my friend who, is always looking at, potential, black swan events. You have any view on what's happening in the South China Sea and what's happening on the oceans around the Spratly Islands, and challenges between the U.S. and China on the open waters? Do you have a view on that?
A little bit. So I don't feel like I have any insight on how bad it could get or anything. But one thing I do find interesting is Steve Bannon, who probably still has the president's ear, I would think, has kind of long been an advocate for being very aggressive with the South China Sea. His take is that the president should tell China to de-weaponize those islands, or we would do it for them. Which, I don't think anyone at the Pentagon would be too excited to go for that at the moment. But just knowing that such an influential advisor for the president has that take.
Navarro on the economic front. So trade war, and who knows what it leads to. So perhaps we could take a look at your dollar chart. I understand that it feels like this move is long in the tooth? Do you have any kind of upside targets in the dollar that if you were long dollars, you should be at least considering lightening up on dollar longs, and where a potential top might come in?
Sure. So I think immediately the 99 level is going to be a little bit hard. I think this area where it's kind of been some support and resistance and around here is going to be a little bit of a problem. And as you can see, like this red zone that I have drawn out is something I've been watching closely. I knew that was going to be difficult to take out. It's just a really strong supply level, and it has been difficult to take out. But I'm just going to back up out all the way to the monthly. I know probably you guys don't do a lot of stuff that far out, but
I love telescopes. Are you kidding me? Not enough people use a telescope. Everyone's using a microscope. So, okay.
You can see,
go ahead.
You see that downtrend line there has been hit over a few months, and that it's not too far away from us right now. Still going to be right around 100.
Okay.
So I think the smart thing to do is going to be see how that level reacts, and then if it takes it out, then I think retesting, at least 102 is going to be in the cards. And I know some dollar bulls that think we actually hit new highs or test the 120 area.
Those are the real true deflationists that are looking for under 1,000 gold and so forth. 120.
Yeah, absolutely.
Do you? I'm looking at your screen and your setup. Any view on whether or not what's happened in the equity markets here, Chase, is potentially a buying opportunity and just corrective, or is your work telling you that we may have entered a new bear market? If you do, trade the stuff. Okay,
I do, and so I think we are in a bear market. However, so I was bearish for weeks, and I did luckily turn bullish last week as we came into what I saw as a nice little demand level, the 200 week.
Yeah,
and you have this, the trend line that goes back to 09, all kind of playing into the same space there. So I got bullish on a shorter term basis, and what I kind of see happening is us rallying back into this underside
26
support area that was really painful there for a while, and then probably coming back down. It does look like the economy's slowing enough to kind of kill the bull market, but it's going to be. I do expect it to be choppy with a lot of volatility and some rip your face off rallies. In the meantime,
right. So I went to your letter, and I read a little bit about it, what you have to say, and tell me if I got the right drift of what you're talking about. You seem to be, even though yields have come off the 10-year from 3.25 to where we are 268. I actually thought we'd hold 270, 275. That you're a long-term bear on the bonds, and that you're looking for shorting opportunities in the bonds and higher yields. Was I reading your letter correctly? Is that the right interpretation?
Yeah, I think that's right. I've been, again, about the same as the dollar. I've been bearish bonds for a couple of years, and I flipped to bullish bonds outside of the 30-year. I'm long everything but the 30-year at the moment, but still longer term bearish. I do think the secular trend has shifted possibly. But for now, I the 2, 5, 10 all clearly, that's a terrible chart. These are all yield charts, by the way. I always like yields for whatever reason, but
okay.
And you can see, that's obviously terrible. I got short or long bonds whenever we hit here, and in this level I added on 5. You can see those horizontal levels, and that's where here on this level is where I got long the 5. Same with the 10 here. I do think the 10, whenever the 10 gets down to this horizontal area, could get a nice little bounce.
But
on the 30,
ultimately, are you looking for that trend line you had on a couple of prior charts that you showed up on yields? No, I think it was one after that. Okay, yeah.
So the
If
five,
do you think we
I
could
do
break
think,
that? You think we could break that trend line?
yeah, absolutely. I mean,
yeah,
we're pretty early in this slowdown. So far, you know, it's been a lot of sentiment and soft data and the leading indicators rolling over. You know, ISM still doing great. So I think whenever and employment still looks great. So whenever some of those things start to roll over, which I assume they will, I don't know how bad, maybe not as bad as a lot of people are fearing, but whenever those roll over, there's a good chance all these bonds continue to rally. The main trading vehicle I kind of wanted to put on lately was a steepener between the 2 and the 30, and it's paid so far. Because you can see the 30's been pretty resilient, and it's coming into a nice little demand zone now. But I just think what's tough with bonds right now is you have all these macro forces pushing yields down, you know, all over the globe, especially. But at the same time, the issuance is so high because the deficits are blowing out, and that's becoming sort of reflexive. The higher the deficit goes, the more you have to issue, and then the higher the deficit goes. Like, so it's sort of a battle between supply and demand, and then the normal reaction function of markets to go buy bonds whenever things get bad.
Okay, so talking about supply demand, very vicious sell off in the energy complex, hand in hand like a Siamese twin with equities. I'd like to see your lines in oil, and if you think we might be approaching some type of low, and for at least a reaction. So you have it breaking down. It looks like about 57 or so. What's your take here? We going to the 2016 lows, or you think we'll put in a higher low?
So I don't think we're going to go quite that low. But I've already been wrong here. So whenever we had the vicious breakdown, we were down about 30% or so. I actually bought a level, which isn't on the chart anymore, and got stopped out pretty quickly. And that was actually when I flipped on bonds. Like, I was a vicious bond bear, but whenever oil just went right through a great area and didn't stop, I was like, okay, like something's changed. Oil supply and demand explained it to a point, but not enough. So I knew global growth had to be really coming off in a way that only oil and a couple other things were kind of showing us. So that was actually when I flipped to being long bonds, which was painful for me because I'd been such a bear for a long time. I actually really like oil on a fundamental basis a lot. I think everyone gets really caught up in U.S. inventories and ignores global inventories. Saudi Arabia, it looks like Saudi Arabia stuffed the U.S. with a bunch of exports that really, beefed up our inventory numbers, and some of that's going to be coming off in the months ahead. So, and I think shale oil is borderline fraud that's going to eventually have a lot of pain. So I think all the fundamentals are really good longer term. It's just a matter of waiting for something that looks like an actual bottom technically before you mess with it. And maybe that happens at about 40 or sooner. I don't know. But
okay, you mentioned waiting, and my belief is waiting is the hardest part. How do you maintain your discipline of being patient, waiting for, you may have an idea or a bias, how do you remain patient? And it's hard to be at your trading station and not trade. What tips do you have for newer traders, as you were once, for developing patience? Besides taking losses, that'll make someone patient. But is there any tip that you could give people? For example, how many trades would you say you make in a 1 month period?
I don't trade much at all. I probably put on, and so when it comes to futures and forex, which is almost all I trade, I'm putting on probably 15 trades a month max. It's somewhere between 10 and 15 usually. Okay. Some of those will be two or 3 days, and some will be, some might run for a month or two. But My tip though is just, man, you always have to start with a chart. So if it's not a technical level that makes sense to you, you can't just go in and throw in an order. So put your limit orders in on the chart where it makes sense, and just don't move them.
And how about risk management? How about risk management, Chase?
So I am a big believer in stops. Technical levels, using daily ranges to kind of help yourself position those stops, and then honoring them. And another thing I think a lot of people don't do enough of is layering in and out of trades.
Yeah,
it doesn't hurt anything to throw one lot on and to test the waters before you kind of layer in on the way up or on the way down. And people tend to press trades whenever they're doing poorly. You should be pressing trades whenever they're going in your direction, in my opinion. So
okay,
adding into trades are good for you.
Yeah, because I say you don't expect perfection at the crap table. So, do you put a one lot on just to make yourself pay attention, or your initial position, scaling into a position? Do you go like half and half, or thirds, or what is comfortable for you when you're layering in and layering out?
So I really like thirds, but at the same time, I have a macro framework that's sort of an overlay for technical trading. So if I have something I have extremely high conviction in on a macro basis, then what I may do is have a core position that I hold even for months. So like being long dollar, perfect example for that is having a core position and then trading around it. So say that core position is a 20% position, and that other 80%. I'm just, trading the charts, layering in, and maybe until you're all the way 80%, that other 80% is in the market, and then being able to scale that all the way back down to that core position whenever the charts aren't looking so good, but my macro framework hasn't changed.
Okay. So your business model now, Chase, I see you have a newsletter. Perhaps you want to show what you opened up the interview with, that page that you had for your website or blog, and what you do, what you offer to the public, and how the best way for them to get a hold of you after they have either heard us live or the video that'll be released in a few hours. Oh, you're a CLT guy. Okay, go ahead.
Yeah, so just a quick look at so I have a couple research products that for clients. I have the Cascade, which is sort of a little bit more of an entry level type of a product. And I do have hedge funds and some institutional clients for this letter, and I also have a more extensive one that's definitely for more institutional type investors. And the website's just pineconemacro.com, and the easiest way to get a hold of me or talk to me is via Twitter, and it's just at pineconemacro.
Okay. All right. Well, really a pleasure meeting you. Like it or not, you're now my trading warrior brother, Chase. And I really hope that you have a very successful 2019, and that your words, really help and edify your subscribers. And I really appreciate you coming in during a shortened week and sharing your views on the markets with us today. So good hunting, buddy. And thanks again for being with us and presenting your style and a few views on face, and appreciate your time today, buddy.
Much appreciated, Dale. Pleasure to meet you, and Happy New Year. All
right, everyone. That's Chase Taylor. And you could find him on Twitter, where he says it's the best place to get a hold of him, at Pinecone Macro. And maybe what's happening here, Chase, is the markets are going through the fire for a rebirth in 2019.
All right, let's see.
All right, buddy. All right, that's it, everyone. See you tomorrow. Good hunting. Remember, don't just count your pips, count your blessings. Looking forward to a great 2019. Remember, like Chase says, be patient and wait for the setups, and you can count on us to let you know when we see things. So everyone enjoy the rest of your trading day. Maybe see you in members chat and tomorrow morning. So good hunting for the rest of the day, and see everyone tomorrow. Adios. Thanks again, Chase.